Good morning, everyone. It's the June 23rd, 2022 meeting of the Audit Committee. On your toes, Mr. Chair.
Please, go ahead.
All right. Chairman Krasansky.
I'm here.
Mr. Corcoran.
Here.
And Mr. Markey.
I am here.
Wonderful. Mr. Chair, we love it. Do you have a quorum of?
Thank you very much. First order of the Audit Committee of EFC. I like what Francis does, June 23rd at 11:15 a.m. First order of business, we have draft minutes from April 7th, the Audit Committee, and just looking for a motion to approve those minutes.
Chairman, I'll make a motion.
Great, in a second.
So Mr. Corcoran raises.
Second.
Didn't see that. All in favor of approving any discussion, any changes, anything, or just approval? All in favor of approval?
Aye.
Great. Every year we look at the charter of every committee and either approve it as is or make changes. We have a copy of the Audit Committee charter. I've read through it. I don't see any changes, but open to any discussion, anything we should consider, talk about the charter as it is. Or if someone would like to make a motion to just approve it as written, I'll take that motion.
I'll make that motion to approve it as written, as there are no changes.
Okay, great. Makes sense.
I'm happy with it as well. Second.
Terrific, thanks. All in favor of approving the Audit Committee charter as written, say aye.
Aye.
Next, we have Marty Dunbar, Jeff Mann from KPMG, our auditors, on the line, remote. And this is, again, annual meeting. We'd love to hear their presentation about the fiscal year we just ended in March. And talk and a review of financial statements during the board packet. So I throw it over to Marty and Jeff from KPMG.
Perfect. Thank you, Charlie. Good morning still, everyone. Not quite, almost lunchtime. Thank you for having us. We are excited to reconvene after having met you now about a month, almost 2 months ago, about 2 months ago. At the outset of the audit. We're down to the final few days here before we issue our financial statements and are significantly complete with our work. Oh, thanks for sharing, Jeff. You beat me to it. So what we'll go through in a lot of respects should sound pretty familiar to what we've gone through in the past. We'll try to highlight any significant changes, some of which we already touched upon back when we met in April. But I will kind of, if you haven't read the materials in advance, I'll let the cat out of the bag right here, right now, that it will be a clean audit opinion for the 2022 financial statements, and overall things went very well. I think probably one of the big storylines, and Jeff, maybe if you wouldn't mind advancing to the appendix area where we have our little screenshot of our audit platform, and not that we need to study this together, but one of the big aspects of this year's audit, which is the case on all of our audits, and I mentioned it before, is our significant investment in our audit tools over the last several years, but this year we officially set our new audit application out to sea to sail the waters of the world, and so we're wrapping up some aspects, some documentation from old files, getting it in, dotting I's, crossing T's, that sort of thing. But that was probably the single biggest significant change this year, and I would imagine going forward from an interfacing perspective, data that management's sharing with us, access to, review data in we call it risk assess areas a little bit more. As I mentioned before, a lot of times when we do our sampling, it's taking a population, running a statistical sample, et cetera, but it's not really it's not focused necessarily on, transactions that might stand out that might not necessarily be picked from a statistical standpoint, but might be missing something. Let's say it's a journal entry with no description, or it's, something that's booked at on the 4th of July. Normally you wouldn't be booking entries on such a day. And so those are probably just a couple basic examples that, some of our new tools and our new audit platform that we rolled out will enable us to do. So we rolled it out this year, and a lot of the tools that we'll be, incorporating into our work will really start to stand out a bit more moving forward. And in many respects, it might not stand out from a audit committee, reporting perspective, and certainly if there's any significant findings or issues or audit differences, those sorts of things, then I guess it would. But in a lot of ways, it's something that, just to kind of inform you, we're always kind of challenging ourselves and investing in ourselves to make sure that what we're doing keeps up with the times, from a technology perspective. And it's certainly the other thing that comes along with this is that we need to really train our people to use these tools and use them effectively. We have more IT certified auditors, IT certified, whether it's Alteryx, which is a kind of a software tool that enables folks to really do intelligent analysis of data, et cetera. We have more certifications of our audit teams in addition to our usual, consulting folks than ever before. And we continue to train more and more and have more folks that are much more educated on the topic than I am. So those are some of the things that have changed this year from an audit perspective. And I wanted to make sure I took the time to point that out, because in a lot of ways, it seems like what we provide to you through this presentation seems very similar year to year. And when you don't have a lot of issues, control breakdowns, those sorts of things, sometimes the messaging sounds kind of quiet, and it seems like there's not much that's changing. But in reality, behind the scenes, there are a lot of changes that are happening and a lot of work that goes into it. So, Jeff, if you wouldn't mind maybe going to the back to the front again, we'll kind of roll through the rest of the program. So as I mentioned, we will be issuing a clean audit opinion. We're in the kind of the final stretch of our procedures, wrapping up the final work paper review, chasing down maybe a few final sheets of paper for the files, things that we'll be completing here over the next couple of days. Nothing that affects our opinion, nothing that affects the report, those sorts of things. Certainly not in any material way. What we like to refer to as kind of our down-to-date procedures. So we're in our wrap-up phase. From that perspective, I guess the other highlight this year from a change perspective, not to steal the show from the auditors and an audit platform, but the other aspect of our audit, if anyone happened to look at the audit opinion in the financial statements, the audit opinion looks a little bit different. No need to pick it up right now. I have it here handy, but while it still communicates the usual unmodified opinion, that sort of thing, and then it highlights management's responsibilities with respect to the financial statements, which is to prepare them and have internal controls in place, and then highlights our responsibilities. But it does break down in a little bit more detail what our responsibilities are and what some of the more significant areas are from an audit perspective. And it and it specifically says the following, which our slides that we'll go through specifically address. In performing our audit in accordance with generally accepted auditing standards and government auditing standards, we exercise professional judgment and maintain professional skepticism throughout the audit. We identify and assess the risks of material misstatement of the financial statements, whether due to error or fraud, and design audit procedures responsive to those risks. which will include examining on a test basis evidence regarding the amounts and disclosures in the financials. We obtain an understanding of internal control relevant to the audit in order to design our audit procedures that are appropriate in the circumstances, but not for the purpose of opining on the effectiveness of the corporation's internal control. We evaluate the appropriateness of accounting policies and the reasonableness of significant accounting estimates made by management. And we also assess whether or not there's any concerns as it relates to the ability to continue as a going concern for a reasonable period of time. Obviously for EFC and many organizations, that's not an issue, but I point that out as that's what the standard setters want to make sure that we're taking the time to communicate directly in our audit opinion, in addition to the usual, there's a clean audit opinion or referred to as an unmodified audit opinion. And so as we go through these slides, you'll hear some of those themes again, because it kind of comes back to what some of the core responsibilities are that we have from an audit perspective. And I thought it's healthy once in a while to just take a look at the audit opinion, because it kind of really breaks down what exactly they're doing, especially in a year where the standards setters change the wording and kind of the format. It's a good time to kind of do a little reality check of what exactly we're saying in our audit opinions. So probably covered enough time on audit opinions. Hopefully you don't have to cover that much time going forward. From a significant accounting policy perspective this past year, there were no significant changes from an accounting policy perspective. So when you look at the financial statements, the footnotes and the disclosures are substantially consistent with the prior year, maybe some minor fine tuning to make some of the disclosures a little bit more readable or user friendly or tied to the face of the financial statements, those sorts of things, but nothing of significance from that perspective. Jeff, if you move to the next slide there.
Good, Marty.
Oh, sure.
Could I just ask a quick little question?
Sure.
Thanks for describing sort of changes and the, you mentioned the standard setters. So this wasn't a KPMG decision to change the sort of the way the letters laid out. It was at a government level.
Yeah, our standard setters are kind of twofold when executing these audits. First, it's kind of tied into the AICPA, but it's the Auditing Standards Board, and what it's kind of codified in is U.S. generally accepted auditing standards. They put out, kind of our rules of professional standards in the execution of an audit. So they introduced what they call Statement of Auditing Standards 134 a couple years ago. That was, in a required adoption here for calendar years ending December 15th, audits ending December 15th or after December 15th of 2021. So 3/31/22 is the first year that it's applicable for you guys and us as the auditors to update the audit opinion and make sure that any aspects of our audit are, being executed consistent with what the audit opinion's laying out. I'll say this, that there were no changes to our audit because our, for the same reason why we have a kind of a unified audit platform and plenty of policies and procedures here at our firm to make sure that we're executing our audits consistent with the regulations out there. So by adopting this new opinion, didn't affect our audit procedures in any way. So to answer your question, it's kind of this auditing standards board, the U.S. Here in the United States, and then codified and generally accepted auditing standards, and kind of dictates what it is that we're doing as auditors. The other aspect of that is government auditing standards, and so if you haven't, you have usually governmental enterprises and not-for-profits that have certain federal reporting requirements, single audit, for example. That's where you need to also have an audit that's executed in compliance with governmental auditing standards which requires a certain level of evaluation of compliance with material laws and regulations as it relates to financial reporting, as well as internal control over financial reporting. So that's the other kind of auditing regulation that we're required to follow in connection with our procedures.
Thank you.
So in terms of the actual execution and some of the required communications here this year, I think that probably these two at the top go hand in hand quite well. We didn't identify any material misstatements or corrections, whether, when it comes to, as I mentioned in the past, when we identify, so when we're scoping out the audit, we set a level of materiality. That kind of tells us what financial statement line item value is of a size that we need to make sure that we design a series of procedures to address. And that's really what we kind of summarize in some of the slides a little bit further on from here. Once you go beyond that level of materiality, then you kind of drop it down a little bit further to what we call an audit difference threshold. So if we identify, some amount that we take exception to, or that we don't necessarily agree with the way that it's reported in the financial statements, that's an amount or a threshold that we would report to you as an audit committee. And so a great measure of an audit and how tidy the books are, that's probably not a technical term, but a convenient one that we'll all recognize, is the volume of audit adjustments or audit differences that we identify, that many times none of them need to be fixed because they're not all that material, because they don't rise to, kind of the size that make the financial statements themselves materially misstated. However, it's kind of an indicator that there's not, maybe some housekeeping that needs to be done behind the scenes. In the case of the corporation here, that we don't identify, or as part of this year's audit, and I know certainly over the last couple of years, several years, we haven't identified audit differences, and it's not because of a lack of audit work and things of that nature. It's a reflection of a sound internal control over financial reporting environment. So day-to-day reconciliations or monthly reconciliations, day-to-day recording of transactions, supervision, those sorts of activities that are core activities, or the cornerstone of a sound internal control reporting environment, seem to be in place based on our audit procedures. And then you kind of go down to the next section here, significant deficiencies and material weaknesses in internal control. We didn't identify any control breakdowns, and there's things that, as we're doing our work, you can observe, looking at a reconciliation for March 31st that was prepared on June 10th, kind of tells you, well, maybe that's not being done on a timely basis. Again, not the case here at the corporation. The activities themselves and the nature of the activities appear reasonable, and certainly it shows up in the results when we're executing our work. Things are organized. Management has, the answers, available to us whenever for all of our questions, and certainly as we're requesting documentation, and we certainly do request a lot of documentation, all of it's available and provided in a tidy way, and that really kind of gets back to a well-functioning internal control environment as it relates to financial reporting. So overall, a kind of I'd say a clean bill of health from that perspective. Moving along a little bit, I guess, a little bit more broadly speaking, we did not identify what we would describe as any significant or unusual transactions here in 2022. There's one that's called non-GAAP. So GAAP, generally accepted accounting principles. So there's a laundry list of accounting regulations that, quite frankly, sometimes they're a little bit more of a pain in the neck to put in place than they're worth, and to put it in place really wouldn't have much of an effect on your financials or an entity's financial statements. And so you might choose to not follow GAAP because it's just easier. And we call that non-GAAP policies. Usually that doesn't drive a material adjustment to the financial statements or that or any of those sorts of things. But as part of our procedures, we have our nice checklist, goes through all the necessary disclosures. And when we're going through accounts, we're thinking about what the accounting standards are, the policies are, that the GAAP policies should be, to make sure that there aren't any deviations from that. Based on our procedures, we didn't identify any deviations that are material, and certainly we did not identify any non-GAAP practices that we consider unusual. A good example is there might be some incremental footnote disclosures that are required, but the amount that you guys would be reporting is absolutely de minimis, and it really doesn't enhance the financials, and so those are generally excluded. And that's a great example of some non-GAAP policies that are in place that are very common everywhere. And so based on our procedures, there was nothing unusual from that perspective, very consistent with the past. Subsequent events, there is a disclosure in the financial statements with respect to subsequent events. We'll continue to monitor that as we get through the date of the release of the financial statements. But nothing too unique to report there, other than just transactions that occur after year end and making sure if they're over a certain dollar value that they're disclosed in the financial statements as they presently are. And then other information that's included in the audited financial statements. There are some supplemental schedules that relate to pension and OPEB plan, in addition to the management discussion and analysis. For each of those schedules, we're making sure that they're consistent with the financials themselves, and there's no disconfirming stories or inconsistent data. So that really kind of covers the activities as it relates to the financial report and some of the highlights from our audit procedures. As you see that little line there at the very bottom, say going concern, that kind of goes back to some of the notes that I identified there, or not notes, but some of the things that we specifically call out in the auditor's opinion. Again, no issues from a going concern perspective, but certainly something that we're required to evaluate as part of our audit procedures. Moving along to the next slide, there's not too many significant items to call out here. I will say that from related party transaction, that's obviously from a governmental perspective, identifying the nature and relationship of different the broader New York State environment. So the necessary disclosures are included in the financial statements. When it comes to related parties, that tends to be a little bit more of a bigger deal for in the private sector when you have transactions with people that might be somehow excluded from the financials that should be. From an illegal act or fraud perspective, we'll get into fraud just a little bit later with some specific procedures that we perform. From an illegal act perspective, we do interview management. We do receive correspondence from external counsel. We do track any known matters that are outstanding and get an updated understanding to make sure that there aren't any financial statement implications. And so no matters to report from that perspective here as of March 31, 22. Based on our procedures, we haven't identified any instances of non-compliance with laws and regulations. Certainly nothing that we identified that we didn't identify anything. Certainly nothing that would be material. And then in terms of the sort of the last several lines here, any difficulties in executing the audit? None. We received, as always, the full cooperation of your entire team. But in particular, the finance team, Albert and his team, did a very good job in preparing the financials. And again, as I said, preparing all of the books and records that we go through to do our audit procedures. So no other issues from that perspective, and we're not aware of management consulting with other accountants as a result of some sort of differing opinions or things of that nature. So no matters to report from that perspective. So maybe I'll pause here briefly before we go any further and see if there's any questions, just because I kind of covered a lot there.
So go back to the beginning. Just want to sort of stress the beginning. You sort of the big difference you mentioned. This sort of digitization, almost. This sort of, you guys are more remote than ever. This is what it seems like to me, and it sounds like it's working, more remote, more sort of, back and forth, checking, consulting, seeing things, but not, physically here. And again, you sort of described that new platform, the Clara thing that you have. Again, you're able to almost do more, much more efficiently, and it sounds all good. Is that a general description?
Yeah, that's, I will say, ironically, when you sit in a conference room for 3-4 weeks or more, it's kind of a lot of paper that's shuffling, that sort of thing. It's effective in its own way, certainly, but those files don't get into our work papers. You're stuck kind of scanning things. You're, typing up a summary of what you just read, that sort of thing. And when you kind of, to use your word, digitize aspects, and you're kind of in this hybrid, at least, if not remote environment, there are efficiencies that occur. And part of those efficiencies doesn't mean that it's a 2-week audit, but what it means is that, you're, instead of spending probably some unnecessary time doing what I would call administrative tasks, you're now able to kind of take a little bit more time to actually, risk assess certain accounts. You're able to roll out some of these tools that have, for example, those sorts of things. So there are, it kind of changes some of the activities that occur in an audit. And I kind of think back, going back just even 10 years ago, an audit has a very different look and feel. And so as a result of kind of the hybrid, world that we're in, the audit has changed along with it. And I think in many respects, it's changed for the better. The nice thing is, being right down the street from the corporation as we are, it's very easy to get together for a meeting. But as everyone's pretty familiar, we're all pretty, able to have effective meetings, through, these sort of communication channels. So it doesn't really kind of rob us of that ability to build rapport and understand what's going on, and still ask critical questions or have difficult conversations, those sorts of things. So you still have all those things happening, but it also does enhance the audit and cuts down on some of the unnecessary work that probably robbed us of maybe some of the quality that, we otherwise would have had probably, a generation before all this.
Thank you.
So Marty, I was just trying to imagine how the process is with the automation. Do you get files delivered electronically, or do you open up APIs and go in and get them? And are you able to do a bigger data set because it's electronic? Because I'm looking on page 7 at your summaries of the audit. It says evaluate complete population of all journal entries. I'm just wondering, can you actually put the data through the system, and then what it tags, because you set those tags to tag things, and then how you go from there. So two parts, like how you get the data into the system. I mean, are you opening up APIs, or are you just sending over data electronically?
No, so it's through just an upload. So we don't use APIs, but there's what they call the provide by client list, which is within the system. So we can go in and add those items directly to Clara, which, I mean, on our end, it saves a lot of back and forth.
Okay, so you enter the documents.
Yep.
Change your format to adjust to Clara's requirements?
No, we and obviously anything we would hand over in paper before is now electronic, but now we can upload the Excel.
The basic
Yeah.
financial. Right. I figured that was the answer. Just wanted to confirm that we're API connected.
And I'll say this, the corporation's a unique, animal in its own way, in the nature of the transactions that are occurring. There's we have a lot of, but there are certain accounts that still have a high volume of transactions. And so, we are able to, let's put it this way, if I were to compare it to even just 5 years ago, there was an aspect where proving that we have a complete population of entries for a particular account was much more difficult because Excel couldn't handle, more than 100,000 line items, for example. And I know that might not necessarily be what the precise number is, but the databases, or the database tools that we're using now make the volume, the data that we can take in and incorporate limitless, and therefore we're able to kind of roll forward an entire ledger and prove we have a complete population. And like you said, in terms of sorting it to identify what we might think to be, higher risk entries. I always like using the example entries that don't have a description. We can identify those much easier than we would have in the past. There would be a haphazard nature in the past in looking at that. And so that kind of is, I like to think of that as an example of a little bit more of the intelligent, auditing that's happening, more so in the last few years, but certainly I think moving forward, there's, more teams that are identifying ways to, evaluate data, and then in a more common platform like we presently have, we're able to share that. Probably as a side note, not to get too lost, in our old tool, which is also, a paperless, audit tool, we updated it annually or twice a year based on audits from regulators, standards that change, those sorts of things. But you had to do a lot of workarounds, to make sure that all the audits are keeping up with the regulations. Our new tool can be updated, by our centralized team, in our kind of our national office, as frequently as we want, and it kind of makes its way out to all the teams that are actively using that the platform. It's required. There's no, this is the kind of the tool we use. So we're always, you don't have an engagement team that might have fallen off the map, so to speak, and isn't applying the latest regulations, doesn't have access to the tools for some reason, that sort of thing. So there's a lot of real-time quality control aspects that are very beneficial in addition to the tools themselves. So quality control is another real key here. We wouldn't want to have the corporation audit be done, significantly different than, one of our other, sister New York State audits or another governmental audit because we're following the wrong regulations because we're, not clued in on what we should be doing. This helps standardize a lot of things as well, in addition to the tools like you're asking about.
Great, thank you.
Sure. And so there's a great kind of segue here even to this page. And I know that we've talked about this in the past. So one of the things, as I mentioned, we have to evaluate the risk of fraud. There is an understanding or a requirement, I should say, under professional standards here. And it's assumed that the risk of management override of internal controls is a significant risk in all audits, and therefore there needs to be a response to that risk, and therefore, as you can kind of see here, a series of audit procedures incorporated into the audit, whether directly or as a result of other procedures to address that risk. So I'll say there's not a unique risk at the corporation as it relates to the risk of management override. And in fact, based on our procedures, we didn't identify any concerns, but it is something that we're required to address and report to you as a committee. And that makes sense because it's something we specifically call out in the standard auditor's opinion that I was reading off to you just a little while ago. So no issues to report from that perspective. And then if we kind of move along, I won't go through all these remaining boxes in particular, but if you I'll probably leave it at this and say that each of these, boxes really highlight probably the more significant financial areas, whether it's the investments side of the house, and the cash and cash equivalents and other investments that are held, or the larger bond financing receivable, other financing receivables that are outstanding, the offsetting or other side, the bonds that are outstanding that are carried on the books, the associated interest, income, and expense, etc. This is really where the lion's share of our work occurs. Like I said, obtaining management's books and records, obtaining independent confirmations as to the balances outstanding, evaluating the value that's recorded in the financials, making sure that what's reported in the financials or the underlying books and records is complete and accurate. And then on top of it all, making sure that disclosures are appropriate. For certain accounts like the post-employment benefit plan and pension plan, we do involve our actuaries to make sure that the balances are reasonable. From a pension perspective, that's pretty a fairly small balance, but the OPEB is a bit larger, and so again, we execute procedures to make sure that that's reasonable, what's reported in the financial statements, and there's certainly a page and a half of disclosures that we also are making sure are proper, and making sure that the assumptions and the models that are used by the actuaries to support all that are appropriate. And again, as we've mentioned in the past, we use our own in-house KPMG actuaries to review that. So that's what kind of encompasses a lot of the other audit activities that we kind of summarize here. And again, as I said at the outset, no issues or exceptions identified as it relates to the execution of any of those audit steps. So with that, that I think concludes what I was intending to cover as it relates to the audit. There's a few other slides in here. I know one talks about future accounting standards. I think for the most part, the ones that are on deck here for 2023 are fairly insignificant. The least one shouldn't be too material, and I think most of the other ones are either not applicable or you're already kind of are in compliance with most of these other ones. So even though it looks like there's a lot on deck, I don't think many of these will have much of an effect on next year's financial statements and beyond. So with that, I'll pause and see if there's any questions on any of the materials or items that we covered.
I've got a specific one. You mentioned the post-employment benefit, OPEB. What I see is sort of, I'm sure there's a nice explanation. I'll ask the KPMG people because they're the ones that who do those numbers. We get used to that number going up every year. The last 2 years, it's gone down pretty significantly. I'm sure there's a sort of an easy explanation. I'm just looking for that.
Yeah, so combination of discount rate. So as the discount rate increases, that means that there's a greater level of discounting of a liability. And I think there's probably some timing of the investment market that's kind of in some degrees when it's going well, it offsets or also reduces that liability or turns it into an asset in some cases. And then even though the investment market might have not been super strong, some of those other, like I said, the discount and other actuarial aspects tend to have an effect on that. So I guess that would probably be the sort of the basics there.
And then also, is it influenced by the number of staff, the current staff?
To a degree, but it also is more so focused on those who have accumulated benefits. So those folks might be gone at this point. So it's kind of an accumulation of past and present staff, depending on their status.
Thank you. Great. That was my specific question. Maybe, and then just maybe a general observation. You talked about how well you work with people here. Barb has left. So it was sort of a transition year with Albert here, without that sort of long term. And of course, Mike, we remember Mike, I don't know if Mike is still involved at all. Not at all, no. Okay, so really it's, again, another, really positive outcome of a year that was still a little bit of a transition, and everything you've described, sounds very positive. So again, kudos to everybody on what sounds like a, positive, like you said, outside, opinion. Thank you.
Yeah, and I'll just interject, we've had some team members on my team who have really stepped up and done just an absolutely fantastic job, filling those big shoes that Bart left. So
All right. Very good.
I absolutely want to acknowledge that.
Excellent.
Good to know.
Yeah.
Good to hear.
Thank you.
We'd agree with that.
Excellent. So now we should meet with the outside auditors just as the board members. So we'll switch over to the
Yes, we will now adjourn for technological measures.
here we go. It goes smoothly.
Those who are board members could step out.
Yep.
All board members are welcome to stay, and if we could join, just to make sure I'm logging everyone.
Great. We're back on, as the audit committee for EFC, and we've had our, private little get together with the outside audit KPMG. They've moved on to other things, which is great. It was all very positive. Maybe I'll just sort of recount that a little bit. Just really big kudos to them. We'll talk about that a little bit, but also really to Albert, his staff, everything here this year, just a really positive exchange we had, again, earlier in the meeting and then in private. And so just only, good explanations of some of the changes, with the audit procedure. But in the end, just really, really positive outcome this year, as the last previous years too. And every year seems to be a good year around here on the audit front. And really big kudos to Albert and his team for doing just a really exemplary job. I mean, the auditors don't use words like that. Everything that they do is always couched in terms of, reasonable and acceptable.
Material.
There you go. But non-material or, yeah. But in my words, I'm not an auditor, so I can just say it. I say stellar, exemplary, wonderful, best in class, because I can't get sued, like they could, but so really terrific. Thank you for a really great job this year.
Thank you, and again, a reflection of the team effort.
Great. Really wonderful. So let me ask you, just sort of, we were wondering, what's the chain of command? I mean, we were talking about this, again, in a really positive way. We really appreciate, and they did this, they said the same, you reaching out to people, talking, there's a lot of really good communication within this organization, which is lovely. It really helps with things like this. I guess I'm just wondering, so is it Mike or is it, Henrik? Tell me the sort of the chain. We were talking about sort of how do you guys work as a, there's an investment committee on the investment side, on the audit, when you're doing your audit work and you want to sort of talk about something, just tell us this, a little bit of the procedures that you go through.
Yeah, so I mean, we meet regularly. We have a bi-weekly with Mike and Maureen. So if there are any issues that we have, we'll talk then. We of course Maureen, Mike's doors always open, but we have regular.
Don't even have doors.
So any higher level communication done in that way, and then we have weekly meetings with the auditors to check in, make sure we're ticking all those boxes.
Weekly.
During
the
audit season.
During audit season.
Yep, during audit season.
But you're free to reach out to them.
Oh yeah. No, if I have a technical accounting question, I'll reach out to Marty or Jeff and just say, hey, this is something we're thinking about doing. What do you guys think? Yep. And they're always responsive.
And Marty will have a management call with myself and Henrik, and so yeah, so he does not hesitate to reach out and talk to us whenever he wants to talk.
Sounds like it works. It's great. Really appreciate all that. That's terrific. No, so that's great. So Yeah, again, we talked about the audit, they covered it really well, we did a bunch of quick questions, again, everything was very positive. Unless there's anything more to discuss about the audit, I would look for a motion to recommend to the full board, that we accept their audit, and approve the financial statements of the corporation.
So moved.
Great.
I'll second.
Okay, terrific. And all in favor of that, motion?
Aye.
Thank you, Greg. The law requires that the lead partner be rotated every 5 years. You know, KPMG has been doing this for a number of years. Marty Dunbar's lead partner. He's been lead partner for 5 years. You know, we have to rotate that. So we are just need to make that clear.
Well, he's been the lead partner for 4 state fiscal year
Got it. I
audits,
see.
so he has the next year's state fiscal year audit, so there doesn't actually have to be an action taken at this time.
Got no
for
action,
The next June
but just
meeting.
we have to know that.
Yes,
That's
you
right.
have to be aware of that. So his first state audit year was March 31st, 2018
Okay.
through April 1st, 2019.
Okay, good.
2021, 22. So he's had 4 state fiscal years, but before by the year's end, he'll be
Terrific.
working with completing and then for
Got
the
it.
next year.
Okay,
Oh,
good.
I wondered why you're taking a motion.
Terrific.
Thank you.
That's
Yes,
beautiful.
thank
Great.
you
Good,
very
good.
much.
No, so KPMG, how long have they been doing it? Do you know? Well,
I
Longer
believe
for sure.
state fiscal year 2011 was their first year, maybe 2010.
Okay.
But it's been
Beautiful.
11 or 12 years.
terrific.
I
All
only
right,
got
thank you.
back to see the links of the prior.
Yep.
lead partners.
That's great.
Sure. I
Good to
can
know.
go
So-
down.
Yeah,
Yeah.
so Jeff is a partner there,
Jeff is a senior manager.
senior manager.
Yep.
And so they would have to find another partner to lead them.
Correct. So Jeff could theoretically stay on once
That's right.
Marty rotates off.
Okay, great, okay. Good, thank you. Okay, so internal control function, we always talk about this. We always, again, we every year is a little different. We are required, in the audit, committee, charter to talk about, should we have an internal control function at EFC? And we just have to talk about it and make a motion that we've discussed it and to either take an action or deferred action. And I'd look to anybody's comment, question, discussion on that topic. Throw it open.
I just wanted to comment that we do have an internal control function.
Yes. Not an off audit. Not an audit. So anybody feel strongly one way or the other, discussion?
Has this come up for debate in prior years, Charlie? I mean, I just
Yes.
have the background and just,
Yes.
okay.
So it has come up for debate. We've actually had serious discussion about it. You know, time to time, you know, something is passed, right? Something would happen, different personnel, different everything, right? You know, something would happen, we discuss it. You know, gee, do we need it? We've sort of debated it back and forth. And again, the size of the organization, the nature of what EFC does. You know, it's a healthy discussion to have. And having said that, I'm somebody who I think, you know, there were years past where I thought we should have someone, or we discussed it, we never did have a person designated for that, but there was a lot of discussion about it. I don't feel at this point that that's necessary. It's my opinion, you know, just having seen how things have gone and what we've been through and where we are. And again, also, there's also a function of the outside auditor and what they're doing. You know,
Yeah.
we have had different outside auditors in the past. Again, my opinion, they were not as thorough. I don't think they had such a wide view of things, you know, and I think things have changed. That's just my opinion.
And just to jump on that, I mean, I only listened a little bit, you know, caught the executive session, but it sounds like the external auditors are not making any noise for it. There's no call from them that would be
That's
contrary
right.
to that opinion.
It's
In fact,
exactly
quite the opposite. Right.
Yes, and that's exactly what sort of prompted the question, like the chain of command, the discussion. It just sounds like there's a very healthy amount of communication within the organization. You know, people not just staying in their this is what Vita referred to as silos. People again in this audit world, you know, it sounds like a very healthy, you know, environment to be that people are, you know, aware of what's going on. And then the outside auditors come in and they confirm that. They confirm that, you know, this is, that people are asking questions, that are not afraid to speak up, and that every time that everything they look at, things are going well. And they find no deficiencies at all. And just the opposite, they find people wanting to do things better and, you know, always questioning. So that's the discussion. I'll just reflect that, the tenor of that discussion. But again, that's just my view.
I would agree, no information has come to our attention that would warrant a deeper dive into that.
Not on the audit committee, but I agree.
Yeah, great. Thank you.
I am the internal.
Oh, are you?
So-
Interesting. Oh, speak up, Jeff. Tell us more. Yes.
No, I think the fact size, there are controls in place. Those controls are always followed. In fact, we have an independent auditor who monitors those controls. And we've never had a reason to do otherwise. So yeah, I totally agree.
Great.
You know, and with Willen and, you know,
Yep.
Chief Risk Officer on, who's, you know, audit, but, folks seem very, comfortable going to Willen, talking about if there's any issues. And Albert is very, open to listening to what his folks have to say and his team. So, and I think, like you said, it's very open communication and I think everyone feels like if there's an issue or if a problem or if something happens and it's like, oh, maybe we need to fix it. It's just, we fix it, you know?
Sounds good. So, yeah.
I was gonna say just to mirror too what Albert said, you know, like, it's always open.
That's right, great.
At the top.
Okay. Sounds to me like, motion, if somebody wants to make a motion that we, you know, had the discussion, but we've decided we need an internal audit function, you know, at this point, at this time for the corporation. I'd entertain that.
I'll make a motion that we do not need to move forward with a corporation internal control audit function at this time.
Perfect, thank you.
Oh, just to be clear, I thought, hold on, just the language there to be clear. There is an internal control function, right? We're talking specifically about an internal audit function.
That's right, personal, sorry.
Yeah.
Yeah.
That's right.
No worries.
Sorry about that. That's right. Not a human.
We want to
being.
maintain the internal control function, but not based on the
Yeah.
report from the auditors and the discussion here, go to an internal auditor on top.
We don't need to say go for EFC.
Such motion is us.
Well, we do, and we do have an internal control auditor.
Right,
And that's Maureen. We don't have an internal auditor.
That's an auditor, exactly.
Yeah.
right. That's what I'm saying. Yeah.
Yes, the internal audit. Yep, good.
All right, so we have a first, is there a second?
I can second that. I didn't realize we were voting for that. All right.
Yeah, so we'll take a vote that we, again, discussed it and that we don't need an internal, audit person designated at EFC at this time. So all in favor of that, motion? Aye. Aye. Great. Opposed? No. Looks unanimous. Terrific, thank you. I think we're done with the committee, and I'll take a motion to adjourn the audit committee.
So
So
moved.
move, Mr. Second.
Second. Thank you, good. All in favor? Aye, we are adjourned. Thank you. Great.
Mike, will you just confirm we've stopped